Hello guys, welcome back. Today we're in the gym. I thought today we'll do a different kind of video. Kill two birds with one stone. Give you the talk that I want to give you here in this video and finish my workout. So the stock market, of course, the hype is returning slowly, guys. And today we're doing a core workout, but we're also doing everything together because I like to hit the body all in one go. So, really, the stock market is in a recession, or the economy is in a recession, but they don't want to put the word recession on it because it scares people, and of course you've got jobs growth and inflation kind of balancing it out. So right now you're stuck at these crossroads. The most dangerous crossroads you will have as an investor or a trader, because you don't really know what you should do. Is the market going to go up? Is it going to go down? For a trader, these crossroads will present opportunities, but they'll also present difficulties. And that's why I want to make this video for you guys. Now, the first thing you want to do as a trader, guys, and here's where many fail, is that they fail to identify the phases or the periods in the market where they should avoid trading or where they should change their trading style to match and meet. And that's really very important, guys, if you want to be a successful, profitable trader. So what do I mean? Look, the market will give you about 250 opportunities a day. Stock market, futures, forex, whatever. About 200 moves, or 250 a day. If not more, if you're counting the 1 minute chart. Probably 500 over a period of 24 hours. So does that mean every opportunity should be taken and traded? The answer is no. The reason behind that is simple. Well, if I was to trade every opportunity, I will tell you today that not every opportunity is equal, and you can tell me that if you're a trader. That means is some opportunities are easy to trade, you can manage risk, and you can almost predict, while other opportunities are difficult to trade, you can't predict, and they don't follow the rules you've been taught and you've experienced before. So, risk is also difficult to manage in those opportunities. So, your job today, come up with a business plan, a time frame when you should trade, when you should avoid trading. I mean, there's periods in the market where you should trade and where you shouldn't trade. Intraday, you can trade because the volatility is slow and the markets are just trying to figure out direction. Market open, momentum traders, one quick trade based on the momentum, and that's it. Pre-market, I trade pre-market for futures. I trade stocks for market open. Intraday, futures, and power hour before market closes, also futures. These are good time frames to trade. But even then, even in those time frames where every trader is trading, you will have days where the market is consolidating, it's waiting news, it's just refusing because it's waiting for something to happen. So here you are, you come trade this thing that if I see it, I'll tell you it's something you shouldn't trade. For example, just wicks. I say, stop, don't trade this. You can't manage risk here, and you have to be quick with your scalps. But for somebody who's not experienced, or somebody who knows this is the case, but they still just want to trade, right? Because they're addicts. You will find that maybe 60 out of 100% of the time you will actually lose on those trades. You will make money in some cases, but it's not something that's consistent. So this is like a pool, this period. For example, just a bunch of consolidation candles. This is a pool where if you step in it, it turns out to be an ocean. Wipe your account. First lesson, identify those periods and avoid trading them. The market is not going anywhere. It will give you about 200 opportunities a day. So, next thing I want to talk about, after I finish this core session, we will go to another machine. So I like to hit everything at the same time, guys. Shock the body. Doesn't know what it hit when it's shocked. Then we'll go to this pool here and do some more cardio. Next thing, every trader should do today is have a business plan. You know, you make money a lot of you watching, you've made a lot of money from the stock market. But one thing you didn't do is get to keep it. Is there a reason behind that? Absolutely. You don't have a business plan. See, you can't just say, I'm a trader. Trading is just pressing buttons. 20% of it is learning technicals and price action. The rest of it is psychological and requires a business plan. So what is a business plan? So we just came to terms that 30% of trading is just clicking buttons and technicals and whatever you guys learn on social media or courses. But the rest of it will be psychological and a battle against yourself. We're gonna go into this. So what that means is you gotta have a business plan. You gotta know when to trade, when not to trade, how many shares you should use, how many contracts you should use, how many trades you should do a day. Of course, I don't believe in over trading if you're a good trader. But that goes back to the first point. If you see these 200 opportunities in the market, are you going to take every opportunity? The question is no. Only take the opportunities you believe in. For example, a structure has formed, or a resistance, or a support, and it's apparent. That way you can use bigger contract sizes and manage your risk properly, because you're close to resistance, you're close to support areas. Okay? So a business plan requires you to come to terms with how you're gonna approach the stock market. What's your risk? How much you're willing to lose? What you're willing to take as a profit. See, many traders, I see them, they make profit even on my chat room. They make profits, then they hold because they want a home run. They want to go for the home run. But not every trade will be a home run. The next thing you know, the market has reversed and has gone back to their entry. It's like they believe once this market, or once this trade is complete, there's no more trades, which is wrong, of course. We just established that there's about 250 to 300 opportunities a day in the market. I'm going to be working at this beautiful view here. So, securing profit is important. I will take profit even if I get a good entry, but then I see the market is not ready to is not ready to drop further. So I will take my profit and wait for the next move to happen and see, will it come down or will it go up? So I can take the small profits but re-enter on the same trade. But this time I'm watching what's gonna happen next, because the market doesn't just shoot down. It always has to go up again, and it has to go up and come down. So this is something you'll learn. I can't, of course, explain it here, but that just leads me back to business plan. This is your business plan. That's what's required from you, is to have a little agreement with yourself, because you are in charge of pulling triggers. You are in charge of making the trades. So you need to have an agreement of when, where, how much you should win, lose, etc., etc. So guys, I'm gonna go finish my workout here. Hopefully this little talk, hopefully this style of video made it easier to keep up. I'll see you guys soon. Peace and love, and let me know if you want more of these videos. Well, I don't even know what I'm doing on a treadmill. I should be doing heavy weights, because that's how you lose weight. All right guys, see you soon.